Hello, this is the Frequency in it FX Trading channel, and in today's video I want to teach a concept I learned online about the moving markets and the particular pair I have on my screen here, which is the US oil. So I learned that the US oil is a very volatile pair in the market that actually moves in a direction for a given period of time. They move and in a manner nothing stops them from moving because they are actually a sub-volatile pair. Now I decided to do some back testing on this pair and discovered that what makes a forex pair tradable or winnable is the fact that it does go in a particular direction and does not stop moving in that particular direction in such a way that everybody can actually see it, anticipate on it, and trade it before time elapses. So every now and then this particular pair does that exact same thing. If the pair is moving down, it keeps going down, and if it is moving up, it goes up. There are probabilities of entering into the market and taking all of your shares when you actually enter a trade with the spotting of the current market momentum. Anytime you enter a trade, there's more likelihood that you win because you saw it moving in that direction and you took the trade, and it will always obey your prediction. Your market in this area moves like that, and this is US oil. Already the trade that I took is already in a profit of $1.96. Let me close this trade right now and do another magic. Okay, now I've seen this pair is going up, like it is going up. Will I take a trade in this video? Not really. This is just for demonstration, but if I see something I like that would trigger me to take a trade, I would take a trade. The reason why I closed that trade is because now I entered the trade when I saw a movement upward via this built or created structure underneath the box I've just drawn. So I saw the structure formed, and at this point I took the trade, and hopefully we started going up. This is the 4-hour time frame. It's been 12 hours since that trade was taken, but now it just keeps going up, and I've not seen any new trend that verifies another trade up. Okay, I've seen something in the 15 minutes time frame. This new structure, what I could have just done was taking another trade upward and not actually. So, but for that reason, I'll take multiple trades because I've seen another buy momentum that is telling me this market will go upward. I've just opened 1, 2, 3, 4, 5, 6, 7, 8, 9 different trades, and hopefully these different trades I've just opened are going to soon move into profit. US oil is very, very volatile. It mostly would go in profit, or it mostly will rise in value because it's oil, and oil are always used. When you are thinking of what particular pair to trade or what strategy to invest in this market, you should start thinking of investing in assets like US oil or metals. But I encourage that you invest in oil kind of equity because they are always rising in value. People are always making use of them, and when they fall in value, I see the value that fell to the ground. I've drew this trend line in the week one. You see the week one time frame moving down, slope down, and when it was down, it was down. I saw that this US oil went down for weeks. This is the first week. Let me just use a brush to show you what I'm trying to identify to you guys. So this is the brush. This is the first candle that went down. I'll clean that to make it clear. These two candles that went down here are indication of a downward movement, and there was another red candle and another red candle and another red and another red and another red. So all of those red candles you see are representation of the week that the US oil spent while moving downward, and more red candles I see on this, more red candles. But just so you know, anytime it goes down, it actually goes down for real. There is no movement like if I want to trade the forex market, I want to trade the market that goes up. When it is going up, it just obeys these structures, and when it is going down, it goes down and just obeys these structures. I do not want to trade I do not want to trade a pair that when going up it starts to range like this. When it goes down, and it goes up again. There are pairs like that, and pairs like that are mostly likely to winning your hard-earned money in this market. When you trade pairs that that ranges, the likelihood is you're going to be losing money in the nearest future, because you're not getting a prediction, you're not getting a movement. The market just doesn't move. Anytime it goes up, it comes down. Anytime you see it going up and you try to anticipate on the uptrend, it goes down. It is a very, 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 very unvolatile system in this marketplace. So we cannot actually bank our energy or hard-earned funds in such market momentum. It has to be straightforward because of the type of markets that we want to enter. We are looking for a market that actually does the straightforwardly movement, and not one that actually plays with human psychology in such a way that never obeys trend analysis. If you saw it going up today, you try to anticipate on it, it goes down. That's not what we're doing. So right now, because of that reason, I thought of investing in US oil, and this is what I see US oil doing now. But however, if I over to this big marketplace, I will see peers that does things like that. AUD baskets, EUR gold. Well, commodities are the most liquidated pair. I do not believe in volatility indices for some reasons. I see many indices here, but I do not know which one to go with. So, but now I see crash boom flip 1000 index, crash boom flip 150 index, crash boom flip 300 index. Question is, should I try all these pairs or should I just look at them? Let me go over them one by one and just see into it what it can do to make my trading life a better place. So let's say I want to check the crash boom flip 1000 index. Remember guys, what I'm looking for is a pair that I can trade with direction, okay, with movement direction that is probable, not something that just does not work. Look at this pair. I would know from the history of this chart if this pair is good or not, whether it is good or it isn't. Now I do not know, but I see this is going down, but anyway, I just decided to take it up. Okay, I just decided to take it up. It's down, but I just decided to take it up just so I can test the accuracy of its momentum. If there is a market that just does follow our instinct, higher than expected, so I'm not going to be trading sugar. Let me check on cotton and see if he has a nice spread for us to trade with. Okay, I see that cotton cotton also has a very unbearable spread to work with. Let me check the coffee robo. The coffee robo has a considerable spread. Let me see what happens when I take coffee robo. Coffee robo does not have a good spread. He has $8 as its spread charges fee. Crash boom flip 1000 has just spiked. He has spiked to the downward side. Okay, I see what is happening here. This market moves down on a natural, so instead of selling up, instead of buying up, I'll just sell down, because I want to trade something that yields instant profit. So I'm just going to sell down instantly instead of just buying up. So I'm going to sell down multiple times to see how this works. So I'm already selling down. I've already sold like 7 different positions downward. Coffee robo, I'll close it. It's $11 loss, but I'm not in panic. I'll just go with the loss anyways. However, you see, I have $3.8 million there, so all those funds are not really anything to me. So all of this coffee, I should back off from them, because their lot sizes, their spread charges are more than their anticipated profit return. So I'm not just going to go close to that. I'll look for a better indices to trade with. I'm here in the indices and I see DXY USD, I see VIX USD. So which am I going to take? Am I going to take the volatility? Let me make use of the VIX USD. Okay, what we are doing here is just trying out these things to see how it goes, so you can go ahead and do it yourself. Anything we do here, if we see a gold mine pair, because that's what I'm looking for right now. I'm looking for a gold mine pair. So if you see it, you can just go ahead and start trading it for yourself in your house. So this is exponential growth indices. I want to try these indices to see what it does. All these indices, I'm just seeing them. They've never been there before. They are new kind of pairs. This is the 1 minute. So let's say if I went to the 1 hour time frame for this exponential growth index, I'm just looking for the first 2 strikes or the first 3 strikes to make my decision on the type of pair I'll be trading, that would just be going in the direction and not actually reverse or whatsoever. So I can see the history of this market. Okay, I can see the history of this market. It is looking good. It is looking predictable. This market looks like a predictable market. So for that reason, I can actually anticipate my profit and future on this one. So that is like a way out. So I've seen that this particular pair is doing well, so I can just look at it and like invest. And now this crash boom flip 100 index is also looking like a gold mine, guys. It's not like I'm exaggerating. I see something good happening here. This pair is going down a lot, and it is looking good to me because I see it working. This has been the movement downward all these hours. Let's check it in a day1 format. In the day1 format, it is just one red candle downward, and then maybe a hem pattern is going to work here, where if we break this particular junction, it just keeps going down. It goes down like this. So this is like how M and W works. This is the weak line where it's going to break through before it goes down. So I think this one is a go. Like you can see, it's reducing my risk already. It's reducing my losses. Even exponential growth index is also looking good. Now all these trades I've just taken, I took them based on trend, right? Because I saw the trend and I thought trend is a good place to start from. If a market there is that follows trend whenever it is taken, then it is a way to invest your money. It is a very, very important and actually accurate way to invest your funds in. If you invest your funds in such assets, likelihood is that you win. So I'm looking at these three pairs I've just taken note of for investment purposes. Let's do more research on more pairs, because the more pairs we discover, the better. I see the crash broom flip 150 index. I note that it doesn't have to start going in your possession as soon as you enter your trade for it. It can actually go through a very slow and steady process before you lose your profits, just so you are not in haste and trying to making money with all of your wrong psychology. So I can see this pair it's already going up. So let me invest in crash broom 150 index, hoping it profits me. So of all the pairs I've just taken here, I'm going to leave the chart now and upload this video to you guys to watch. So when I come back later, I'll show you more, and I'll update you people on the latest profits of this pair, and I'll let you know if they will be included in my next investment plan or not. So this is going to be a part 1 under the part 1 and part 2 of my playlist. I'll put it here so you can easily access it. This is the frequency unit FX trading. Thanks for watching. Make sure you like, subscribe, and come back and watch more of my next video. See you in my next video. Bye.